Welcome to the show. Let's talk to Connor Campbell. He's a financial analyst at Spreadex. Morning to you, Connor.
Good morning.
Let's talk the Dow Jones. We've got a daily candlestick chart here. Key events: is the Dow done in terms of record highs? You ask the question. US final Q2 GDP on Thursday. Is this the top?
You know, it has slowed down in the last week. You know, it was gradually eking out those highs, hit 22,400,
yep.
and has now drifted away. Since it hasn't admittedly drifted away very far, you know, it's still 100 points. And the Dow, you know, if it's feeling lucky, can clear that easy. It can sort of yawn and, you know, make up 100 points. But the key thing is, well, where's it going to get momentum from? You know, the Fed is now eyeing a rate hike that, you know, feeds into the dollar. The Dow did admittedly weather that quite well. You know, it wasn't too shook by the Fed's meeting and the winding down of their balance sheet, etc. The Q2 GDP on Thursday, again, the figures are likely to play in the dollar's hands rather than the Dow's. If it is a very strong figure, then the Dow might get a bit of a rub. But then you've got the stuff like the North Korea. You know, since this chart was taken, it's fallen towards 22,300 on the North Korean foreign minister saying the US comments at the weekend were a declaration of war. That's going to repeatedly sort of drag on the Dow, I think, in the coming weeks, every time you have a little flare up. And that might prevent it returning to the 24,400 mark. We've seen our clients selling around that, you know, 22,300 mark. I think they are, for now at least, seeing it continue to drift away from the highs it hit last week. How far it drifts away, though, I guess is the key question, because, you know, if it remains around that 22,300 mark, then it could easily return to those highs next week. I don't think it's completely done yet, but it does seem to have slowed down significantly that it could go the other way if there is another flare-up from North Korea or something like that.
Connor, thank you very much indeed.